Hi everyone, let's go over my medium time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario, where we're looking for either a wave 3 or a wave C towards the upside. If we zoom in to this structure over here, you can see that currently price is bouncing on the 0.236, which is a very rare target for a wave 2 and also actually a rare target for a wave B. Now on the micro scenarios, we do expect another move to the downside, and that 382 over here does have nice confluence with a support area that we have between 29.1k and 28.8k. So that is a very interesting area for then potentially a continuation towards the upside. It has to be said that the 382 taken from the low to the high over here is a common target for a wave B and a rare target for a wave 2. So if price is bouncing on the 382, the probabilities are actually a little bit higher for this being an ABC than a 1, 2 and a bigger 3 towards the upside. However, that also depends on the move that we get towards the upside, because a wave C tends to be a bit more lazy, a bit more like sideways, grinding towards the upside, while a wave 3 tends to be more impulsive and parabolic, with volume increasing rapidly as well. If we look at the targets for a wave C, taken from the low to the high of A to the estimation of wave B around the 382, then this is the most common target area for wave C between the 1 and the 1.236, which is sitting between 35.4k and 37k. And if we are looking for a bigger wave 3 to the upside, where you want to see this parabolic move, then the 1.618 is a minimum target for a wave 3, sitting currently at 39.6k. The invalidation of this scenario is if price would move to the downside and take this low, and that is then also the medium time frame bearish scenario, where we are then looking for another movement to the downside in a bigger W, X, Y corrective structure, where inside wave X we were then looking for an expanding flat, which is an ABC, where C is a 5-wave move to the upside, with the maximum target being the 1.618, which as you can see has been very nicely respected for then a 5-wave move over here, finishing at the 1.618, only some wicks above, but that is absolutely fine. Before then the range started. Now wave Y to the downside is a 3-wave structure, with the most common target being between the 1 and the 1.236, taken from the high to the low of W to the high of wave X. Currently, that means that this is the first structure that wave Y is forming, because at the moment we're just going sideways, and what you want to see is a move to the downside, then a bit of a range again, and then a continuation to the downside. And at the moment we don't really see any bigger movement to the downside just yet. However, for this wave Y, time is ticking, because you also see the vertical lines on the chart, and these are fib times taken from the high to the low of W, and then you put it on the high of X to basically look for how long is wave W compared to wave Y. Like how long does it take for wave Y to develop compared to the length in time of wave W. And the 1-to-1 basically means that if from the high of X price is going to hit this 1-to-1, then this price action is in time is the exact same length as wave W in time. And what you want to see usually is around a 1-to-1 relationship between the different waves, or maximum, let's say, the 1.618, but we're not even getting close to this area as it stands now. But the 1-to-1 is coming soon, as it is positioned on Saturday the 22nd of July. Also, this target area for wave Y already has been hit once before, as you can see with the price action over here, and I don't really like that. Like, I prefer targets to reach a new support area, but this target area of Y, very close to the yellow box over here, which already has been tested once, you know, the more you test an area, the weaker it becomes. So it doesn't really make too much sense for me that the most common target area for Y is in an area where wave W has already been once before. Like, is this then going to be the area for a bigger push to the downside? You know, doubts. If we then zoom in to the lower time frames, I actually want to show you this. So if we quickly go to Discord, I actually noticed this morning the following, where we have a low over here, which was part of a double bottom, right, at 30k, low number 1, low number 2, price wicking below this double bottom for me overnight, then backtesting the double bottom horizontal line, as you can see, for then potentially a move to the upside. And that made me think of something that happened last week, where we had the same scenario, but then we had double tops. High number 1, high number 2, price wicking above, then eventually coming back to the horizontal line before a continuation to the downside. And if we look at this on the chart, on the live chart over here, then this happened last week, right? We had a double top, high number 1, high number 2, wick above, going down, back testing, moving to the downside. And if we look at what price is doing at the moment, we have low number 1, low number 2, and then if I go to the 15, you can see price has taken the low, moved up, moved down, back testing again that horizontal line very, very nicely indeed for now this move towards the upside. So that is very interesting, where then compared to like the last week, you expect continuation to the upside to reach this target box that we have, which is positioned over here. The blue target box, the resistance area that we've been looking for a while now, between 30.5k and 30.7k, which is also an important target in this bullish micro scenario, where we're looking for a three-wave structure to the upside and then a WXY, where wave Y is also a three-wave structure. Now the double bottom has then already been taken, but we do have a double top, or one can argue a triple top, because we have high number 1, high number 2 and high number 3. So actually a triple top over here for some interesting liquidity just below the target box as well. Now what you can see is that this then is the low of wave X in a three-wave structure, which then is a WXY in a zigzag, double zigzag, or a zigzag by itself, and then eventually a wave Y in an expanding flat, with this then being the target area, looking for a move towards the upside, which, as mentioned in my previous video, is actually the preferred scenario. And in the bearish micro scenario, we're looking for a move towards the downside, where this then still is a yellow W, but then this corrective structure takes longer for the yellow X before then continuation to the upside. But it doesn't really make too much sense for me at the moment, this scenario, at least as an alternative, mainly because of this over here. So if this is the end of W, which is the same place, but now the X from the bullish scenario, which was over here, moved to the right, because in wave Y you expect a three-wave structure, which then has to be something like this, so X has to be here. In this scenario, wave X didn't hit the 0.618 taken from the low to the high to then this low over here, because you're looking for a three-wave structure, right? But the 0.618 usually is a minimum target for a corrective structure, which hasn't been hit. But we cannot forget this scenario, because we still have some resistance above the daily naked point of control at 30.3k, and we have to wait and see how price is going to react here, because in this wave Y, looking for a three-wave structure, which can still be something like this, where we have the daily naked point of control, then return to the daily before then moving up. Talking about double bottoms as well, we have one over here and over here. So once again, price creating a double bottom at the low. So then finally the last double bottom could be taken, hitting the daily before then that move towards the upside. If we look at the CVD divergences, we have the bullish divergences over here. Higher low on price, lower low on the CVD chart, which I'll show in a second, where the target are these highs over here, which is in confluence then with the double top that we have between these highs and also close to the target box. And then more locally, we have bearish CVD divergences going on, lower high on price, higher high on the CVD. And actually very soon after price, actually before price moved up, we also saw some additional bullish CVD divergence, higher low on price, lower low on the CVD. So we have a bigger bullish divergence, and then more locally another bullish divergence with the back test of the double bottom for potentially continuation to the upside. But these bearish divergences are only going to be invalidated the moment price is going to move to the upside and takes this high over here, sitting at 30.250. If you go to the AGGR chart, then you will see over here we have a higher low on price, but both on yellow and on blue, we have a lower low on the CVD line. So lower low on yellow, lower low on blue, higher low on price, bullish CVD divergence with the target over here. And then more locally, if we zoom in, you can see on the 5 minute that price currently has a lower high on price, but a higher high on the yellow CVD, which is a bearish CVD divergence. But it has to be said that this is like the 5th bearish CVD divergence this morning, because as you can see, price moved to the downside while CVD was moving up and up and up and up all the time. Bearish, 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 bearish. Now, personally, I like the, if one trades CVD, I prefer always the first CVD divergence. But this now, with this move to the upside, is again like it's the third or the fourth or the fifth bearish divergence with this high, because as you can see, the line was just moving up consistently. So, you know, we'll wait and see if the bearish CVD plays out, because we also have more local this bullish one, higher low on price, lower low here on the CVD in yellow, which then would mean a potential push to the upside. Now, this bullish divergence already played out, but nonetheless, it can be the start of a bigger move towards the upside. If we then look at the probabilities of the different scenarios I mentioned, then on the medium time frame, I prefer currently the bullish scenario for more upside. So that means I would prefer this scenario over here, where I do expect a move towards the downside still, or at least that would be nice, keeping an eye on the 29K level for then potentially a move towards the upside in either a wave C or a wave 3. And if we look at the micro, then the preferred scenario here at the moment for me is also the bullish scenario, where we are going towards the upside, and then of course wait and see what price is going to do at the daily naked point of control at 30.3K, because in the bullish scenario we want this one to be taken for a continuation to the upside, to take these highs and also test this resistance area over here. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.